Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. So, what happened in the market last week? Let's take a closer look. The major global stock indices were marked by mixed performances across regions. Wall Street rallied to new highs, led by a tech sector surge. The S&P 500 rose 1.3% and the Nasdaq 2.9%. European markets declined last week due to political uncertainties following a surge in far-right power in the EU parliamentary elections. The French index fell sharply after President Macron called a snap election, contributing to the Stoxx 600's 2.1% drop. Asian markets were mixed, with the Nikkei down 0.5%, while the Hang Seng Index slumped more than 2% on weak Chinese data. The USD JPY pair rallied to a high of 158.25 last week before pairing gains to close at 157.13 on Friday, as the divergence in monetary policy stances between the hawkish Federal Reserve and the dovish Bank of Japan continued to drive the currency pair higher. Meanwhile, the British pound experienced swings between 127 and 129 against the US dollar last week, driven primarily by shifting expectations around the upcoming UK general election and the contrasting monetary policy stances of major central banks. The euro weakened against major currencies like the US dollar and Japanese yen on the heightened uncertainties. Both oil, WTI, and gold price rallied. WTI crude oil prices rose around 1% last week. The upward price movement was primarily driven by expectations of higher fuel demand during the upcoming summer driving season in the US and other major economies. Gold rose more than 1%, boosted by lower than expected US inflation data. In the US, the Federal Reserve kept interest rates steady at 5.25 for 5.5%, but signaled one rate cut this year, down from 3 projected in March, as inflation cooled but remained above target. Lower than expected inflation data reassured investors, supporting growth stocks and impacting Fed policy expectations. Rising jobless claims raise concerns about economic health. The yield on the 10-year U.S. Treasury note fell sharply from 4.43% to 4.21%, driven by the downside inflation surprises. French President Emmanuel Macron called for snap legislative elections following the European Union elections, which indicated a significant shift toward left-wing and far-right parties. This move heightened political risk and uncertainty in European markets. European Central Bank President Christine Lagarde confirmed that restrictive monetary policy would continue and advised not to expect further rate cuts soon. This did little to improve investor sentiment. The uncertain political environment led to a sell-off in European government bonds early in the week. Euro area trade data showed a surplus in April, with export growth significantly outpacing imports. Industrial production unexpectedly fell by 0.1% in April, against a forecasted 2% growth, contributing to a mixed economic outlook. The UK economy stagnated in April, with growth in services output offset by declines in production and construction. The BOJ's decision to maintain its current policy and delay tapering signals a cautious and gradual approach to monetary normalization. Despite the contraction in GDP growth, Japan's economy performed slightly better than initially expected, showing resilience amid natural disasters and production disruption. The BOJ continues to monitor inflation closely, with producer prices rising more than expected, which could influence future policy decisions. What to watch this week? This week is pivotal for investors, with significant economic data releases set to influence market sentiment. Political developments, particularly in Europe, also remain crucial for market dynamics. Keeping an eye on these events will help investors navigate the potential market impacts. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.